Hello, good evening, viewers. Welcome back to GBS video lecture series on financial accounting, financial management, and management accounting lecture series. This is Mohammed Ashik Khan, the managing director and the principal consultant of GBS and the global associates. Today, I'm planning to take up the first accounting standards, which is International Accounting Standards number 1. International Accounting Standard number 1, which is IAS 1, presentation of financial statement. This is the first of this series in our total discussion of IAS and IFRS. So now here we will go through this standard with the complete information, and then I'm going to discuss the excerpts and the most key information that is useful to all of us as users of international financial reporting standard or international accounting standard presentation of financial statement. And the first thing that we wanted to go through here is the objective. The objective of IAS 1 is to prescribe the basis of presentation of general purpose financial statement. Now, here what you need to understand is that the basis of general purpose financial statement. Now, when I say general purpose financial statement, that means that we are not going to address any industry based set of financial statement. We are not going to talk about preparing a financial statement for a bank, or we are not going to talk about preparing a financial statement for an oil and gas company, or we are not going to talk about preparing a financial statement for an insurance business. Whereas we're going to address a common average set of financial statement. With that instructions and the information given in this standard, the preparers may uh, use this standard to follow the conditions when producing the financial statement. So that is the objective. Then we will have to go through the second step in the standard is the scope. The scope is an entity shall apply this standard in preparing and presenting general purpose financial statements in accordance with IFRS. So, what does that mean? Now, we have to prepare and present. We have to prepare and present general purpose financial statement according to IFRS. This is what the scope is. The very scope of our financial presentation of financial statement IAS 1 is to say that how you going to prepare a financial statement by complying and completely following all of the given accounting standards prevailing in both. When we say IFRS, it will include both IAS plus IFRS. So both of these two. So that's the scope. Then we discuss about definitions. There are various definitions that is been given and discussed in IAS, and that talks about the definitions are definitions. One is they talk about what is a general purpose financial statement. Now, the general purpose financial statement is a set of financial statement addressing for a common set of or common average addressed covering many different industries. So that is that. Then the second definition is here we go through is that what the meaning of impractical to do so. So when we about to apply and follow any given guidance or instructions in a given accounting standards, And what you mean by impractical to do so is when after making every reasonable effort, after making every reasonable effort, still we are unable to fulfill the condition of any given instruction in the given accounting standard. That's what we call it impractical to do so. So that is number 2. Then what about the any other definitions that we may have to go through? And that talks about this talks about what is IFRS, what is IAS, and who is IASB, and all this. So this we will not go through in detail, but anyhow IFRS means International Financial Reporting Standards, and IAS means International Accounting Standards, and IASB is a body that prepare and produce IFRS and IAS. So after then we then go and talk about financial statements. So we then discuss about financial statements. So the financial statement is a document that is produced in an organization after every given intervals in order to find out the financial results of an entity. That would include to find out the financial position, financial performance, and overall cash flow movement, and also the movements in equity of the organization. So that's what the financial statement is, and then we have to find out what is the purpose of producing a set of financial statement. Producing a set of financial statement. The purpose of producing a financial statement is to provide the users, any needed information. Provide users any needed information as to the results. I would say financial results of the entity. So this is what the purpose of financial statement. And we will then find out the components of financial statement. So what are components of financial statement? Which are, first one is statement of financial position. That is one first component. Second component is statement of comprehensive income, statement of profit and loss, and other comprehensive income. That's the second one. In other words, in short, we call it profit and loss. The first one, in short, we call it balance sheet. Second one, in short, we call it profit and loss. The third one is statement of cash flow. The third document is statement of cash flow. And the fourth one, this is to deal with the movement of cash. The fourth one is statement of changes in equity. That's the fourth one. And the last one is what we call disclosure notes. These are the 5 components of financial statement. And also we have to learn about elements of financial statement. The elements of financial statements are assets, liability, equity, income, and expenses. So these are the 5 elements of what you call financial statements. Let's move on. One of the requirement of IAS 1, one requirement of IAS 1 is that we have to make sure fair presentation of financial statement according to IFRS. We have to make a disclosure in the financial statement that we need to disclose that the financial statement is fully complied with applicable IFRS. So that we need to disclose. So, and then the IAS also discusses certain accounting concepts. So one of the, now when we preparing a financial statement, the financial statements are prepared on one basis. That basis is that we prepare financial statement on a going concern basis. Now, see, under the revised IAS 1, the way we organize our statement of financial position, we do a classification as to the assets. We classify as to non-current and current. Also, the liability we classify as to non-current and current. Why we do this? Simply because we are believing that, we are making an assumption that the business is having a valid going concern basis. In the sense, the business will continue for an unforeseeable future period without necessarily having to close the business. So on that basis only, we are categorizing our assets and liabilities as to current and non-current classification. Then also another one important basis of IAS 1 is that we follow accrual accounting. That means the transactions are recorded when if you talk about income is recognized when we earned, not when we received, and expenses are expensed or recorded only when it is occurred, not when it is paid. So that's how we record our transaction in the financials. So income recorded when earned and expenses recorded when incurred. So that's about the accrual principles. Then we also need to discuss certain other matters about IAS 1 that talks about. So one of the important factor is that this has to talk about the level of precision. Meaning that at what level you are showing your currency. Maybe at a number, let's say for example 1,243,750. If it is in dollars, we could show it we can present in different way. One I can show is $1.2 million. So this I have presented in millions, or I can also show in thousands. $1,000 I can show how 1,243.75. So in the financials, you got to tell the user on what level of precision that you have included in reporting the numbers. So that is number one. Number two, you should include comparatives. You should include comparatives in preparing the financial. So as much as possible, you have to include the comparatives to give a better comparative information to the users of the financial statement. And the third situation or third matter that is needed to include that, how frequent, the frequency of reporting, whether monthly, whether quarterly, whether biannually or annually. Usually annual financial statement we prepare on an annual basis. So that frequency you have to say. And also we need to include the name of the company or name of the entity. We need to present the name of the entity, the registered address. We need to provide the registered address. We also need to include the nature of activity. Nature of activity. We need to include the nature of activity, and we also need to produce that one another important factor is that is actually so these factors needed to include as part of the present disclosures to comply with IAS 1. And we have to also make sure another factor, the consistency in reporting. So all what you followed in the previous year, you got to consider in terms of accounting concept, policies, the calculations and all that has to be consistent. And then what else that it is important? And the other thing is about the structure. Structure actually you all can find it out as well. The IAS 1 talks about structure, about statement of financial position. Please refer in any of your materials. If not, contact me personally. I would be able to share with you. Statement of profit and loss, statement of cash flow, statement of changes in equity. All the structures have been elaborated, which you can easily find it out if you Google it up. Otherwise, please do contact me personally. I should be able to share with you. So with that, I believe almost the main areas that is needed has been discussed and covered. And also one last thing, that you have to include other disclosures. And another point which, before I forget, now when we talk about the disclosure or the presentation, sometimes we present in the face of the financials, or we work out as a summary, and that summary is provided as a note, and then the net totals we will bring it to the face of the financial statement, net totals in the face of the financial statement. Thank you so much in watching this video, and my next video will be IAS 2. Please tune on my YouTube channel, and please do subscribe my channel for your benefits, and also to benefit for others as well. Kindly share this YouTube channel or this video, and also don't forget to press the bell icon in order to be getting updated all the fresh technical content on all these financial reporting and other related topics. And I will also be discussing commencing my other video on auditing, that will take place parallelly. In a week you will receive two separate videos, one on financial accounting, other one on auditing. Thank you very much, and good evening, and hope to see you soon.